All right. Hello, everyone. My name is Tanner Teben, and I did my project over Best Buy, and we're going to determine whether Best Buy is a good purchase or not. So, starting out, background information. Best Buy is a global company founded by Richard M. Schultz and James Wheeler in 1966. They are most known for their electronics and their home appliances, and on their fiscal year end in February 2020, they had $43.6 billion in revenue with a gross profit of $10 billion. And they are headquartered in Richfield, Minnesota. And currently they have over 1,231 stores. So they're kind of a big company. And just going next to their business model and design for successful operations. In 2012, they had a complete redesign of their business model. This is where people were buying more online rather than in stores, and they saw a decrease in company revenues and their margin really tightened. So, how they adapted to this is they really promoted services. So, they expanded their services and support and their in home advisor programs and their technology consultants and provided services that online realtors could not provide. So, they expanded their product range and they offered a price match. If a customer found something online, they would match the price. Moving on to the chunk of this presentation is the financial statement analysis, where I'm going to be looking at my reformulated financial statements and the ratios that come from it. And at any point in this video, feel free to pause it and look at any of my evaluations. So kind of going over this briefly, in 2020, we had a net operating assets of $6.4 billion. And just looking at it from the 2019 fiscal year end balance sheet, so 2018 numbers, we had a $3.8 billion net operating assets. So we do see growth from the years from going to 6.4 from 3.8. That's almost double. And now looking at their reformulated financial statements, our comprehensive income available to shareholders grew at 1.4, and it came from a 1.3 billion. So we show some growth there. So maybe this is a good buy into the stock because we are seeing our 10K numbers going up. And now our ratios that come from these reformulated financial models, the first three really show a true picture of how Best Buy is operating. So we are seeing a growth in these ratios, but one thing I want to note out of these ratios is that operating profitability. So this is how we're utilizing our operating assets. And we did see a decrease in 2019, but this is because we did purchase more capital assets, and this really decreased that ratio. So going into forecasting and valuation, we really want to see, is our valuation more than our market price? And this will really allocate that if it's a good buy or not. And we can do it with these 4 listed models that I will go into and show you how I did. So I pulled these right from my Excel spreadsheets. And this is where the comparable model, this is where we're looking at our top 5 closest competitors, and I chose Amazon, Walmart, Costco, Target, and Sears, and I really based this off of the operations of the businesses. And I went off of the sales, earnings, and book value ratios in order to get to my valuation of $33.2 billion. And once again, feel free to pause this and look at my models. But comparing that 33.2 to the 21.9 market value of Best Buy, we have a higher valuation than what the market says it's worth. So this would make it a good purchase. That model is the least accurate model. And as we go forward in the presentation, the models get more accurate, which leads me to my Best Buy's discounted cash flow model. This is where we're kind of adjusting the numbers that we get from the 10K, and we're going to forecast it using growth rates. And I want to kind of go over how I allocated these growth rates. So in 2020, we had COVID-19, and we had a lot of uncertainty in this year. And so I don't really project there being a lot of growth in the year. Before COVID hit, Best Buy was growing at a constant rate of 9%. So now with stores being closed and us only doing online sales and stores slowly opening back up, I only see a 6% growth. And when looking at Yahoo Finance, to get a different perspective of what they thought we wanted to get back to normal and really grow until fiscal year 2021. So that's why I gave it a 10% growth rate, because that's the year that I kind of see it picking back up as well. And for the remaining years, we had a constant rate growth rate of 9% before COVID. So a constant growth rate of 8% kind of seemed reasonable to me. So going through this model, we do the appropriate allocations, and I got a value per share of $161.10. Now, comparing that to what it was trading at 84.90, this valuation is higher than what the market said it is. So this model is telling us that it is a good buy. Now going to my Best Buy residual model, this is where we're really looking at the stock. So earnings per share, dividends per share of that year, forecasting it out using the same growth rates that I explained before. I got a value per share of 119.77 per share, comparing that to the 84.90 Best Buy's value per share. This is a higher valuation than the market is trading, thus leading it into being a good buy into Best Buy stock. Now going forward to the residual operating income model, this is the best model that you can do because it is the most accurate. So this is because we're taking numbers from our reformulated financial statements and really looking at the operating income section, the more allocated income numbers that investors are interested in. So we're taking those numbers, forecasting it out using the same growth rates that I stated before, and I got a valuation of $115.22 per share. So this is the closest that we see to the market value at 84.90, but it's still higher, thus leading it into being a good purchase into the stock. So that leads me to my last slide, where it's my recommendation. If I was an analysis, I would say Best Buy would be a good purchase. Why? Because we see growth in the 10Ks and the residual income statement, reformulated income statements. And the ratios showed a growth, as well as my valuation models. They were all higher than what the market was saying. So this is the end of my presentation. If you have any questions, feel free to comment below. Thank you, guys.